Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 19th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with economic data. It being a Monday, generally speaking, there is very light economic data, and not a lot of people actually look at the data point that we got today, which is the NAHB Housing Market Index. That's a National Association of Home Builders. It is a confidence reading in and around what they're seeing in their sector, which is the housing market, right? So anything above 50, kind of like the PMI and those numbers, anything above 50 is favorable outlook in the economy. Anything below 50 is contraction or a non-favorable look at the economy. So what we got was a 60, but that's confident, but not as confident as they were expecting. They were expecting 67. So slightly lower than expected on that one. And then later on this afternoon, Australia has a monetary policy meeting minutes, and we've got FOMC member Williams speaking. So I don't really know if that's going to move any of the markets today. Let's look at the overall markets, though. We got crude oil just slightly off today by about a couple of pennies. That being said, I think we're building a nice little round off here. It's almost looking like a dead cat bounce, to be quite honest. I would expect it to move a little bit higher. I think there's still some demand there, but with the crude oil inventory builds that we've been getting lately, that 40 handle is looking very likely, to be quite honest. And we do get crude oil inventories on Wednesday right before the holiday weekend. So, and I probably won't be around on Friday. I've got family coming into town. So, may not be doing a market commentary unless you want to see my family running around in the background. Anyway, so crude oil still has a couple of days to figure out what direction we're going to go. And I have a feeling they're probably going to wait for that economic data point on the crude oil inventories Wednesday. Gold futures unchanged right now, but we would expect some upward pressure in gold as we're seeing the equities overall really kind of take a tumble today, and Bitcoin not immune to this liquidity event. I've talked about it. You know, the least performing asset, or the one that you're least confident in, is the one that you're probably going to likely close out in this type of bearish market in the equities. They're going to try and free up some cash to probably buy more equities at these more favorable levels. So Bitcoin's still suffering, and I was thinking they were building a bottom here, that it would come back up to the point of control, but with today's market action, that is not looking like the direction that Bitcoin wants to go. All right, bonds, they are slightly positive today right now. Again, I would expect them to start migrating slightly higher, as I think that the Fed is going to start signaling they are going to pause for a while to see how all of this shakes out. So the bonds are probably priced very close to where they should be. All right, we got the VIX moving higher today. Again, prefaced that we talked about with the equities. They're falling out of bed right now. Dow down 200 points right now. It was just down about 225 a second ago. Came down and tested the 200-day moving average. Again, that is going to act as a bit of support, but I think that the bigger picture here is the point of control that lines up with the 23 Fibonacci extension I have right here. So that, I think, is going to trump maybe some of these 200-day moving averages that are lining up kind of right there by it. So I think the equities are going to bounce around right around these levels for, maybe a week or so. So especially with the holiday week, I don't think we'll probably see anything breaking out anytime soon. Again, we do have the NASDAQ coming down and testing these Fibonacci levels here. They're going to act as support because this point of control is going to act as a magnet as well. So that's doubly strong in a sense, right? If that's going to act as support and we've got a magnet above us that's kind of driving us to that point, well, the market is going to ping back and forth the way I see it. So we've got the NASDAQ off by about 120 points, but right by the point of control. So we can see these massive moves back and forth, especially when we're at this point of control as people are trying to, break out of those ranges there. And we've got the E-mini S&Ps right at the point of control, like I mentioned, and down about 23 points on the day. All right, let's look at the daily chart of the E-mini S&Ps. Overnight inventory really made no attempt to do anything, but coming into this session, maybe even the housing data point that NAHB put a wet blanket on this market because it was lower than expected. It's still favorable, but just not quite as favorable as we'd like to see. So that being said, the market is starting to slide off on that data point, I believe. All right. A couple of trades that I've done. I haven't taken anything off, although I do have a couple of trades I'm trying to get out of. Let me just talk about that real quick before I go into the trades that I'm adding on, because I do have some working orders in here on XRT. If you guys remember, I have on the 52.45 put spread in there. It's a long put spread. I paid like $3 and let's say 20 cents for that. 50% of my max profit would be adding in about another $2. So right now I am working to get out of this thing at $5.35. I'm about probably 20 cents away right now. So if you see any more pullback on this, I'm probably going to get hit. If it comes down and tests that 45 puts that I'm actually short, because this is a long put spread, if it comes down and tests those 45 puts that I'm short, I should easily be able to get out of that for my 50% of max profit today, if that happens. All right, and then on to Morgan Stanley. The banks have been suffering. I think it's just a little overdone to the downside. I'm looking for opportunity to add any kind of long deltas in my portfolio. So with implied volatility this high, the best scenario is to add some short deltas in there. And with Morgan Stanley, I went in and did the December, sold the 40 puts in there for 33 cents. And then that's off of that bounce. We've got a nice solid bottom right down here. So I am able, because we're trading down that level at those levels, I'm able to get like $3 or $4 below the levels that we've seen as support. So that's why I'm setting that strategy up like that. That's why I picked Morgan Stanley for this trade of all the other banks. And then we've got FedEx. Again, no earnings in the cycle that I'm looking at least I didn't think I did, but now I'm looking at this. I thought these earnings came out a little bit further away. I might come out and get out of this trade then. It's below the 200 there. That's a nice support level. That's why I picked it. It's a nice round number. I think that it'll hold that support. Again, I didn't realize that they had the earnings coming up. I didn't see that on the chart I was looking at. So having said that anyway, I sold the D's 200 puts in there for $1.28. And I'm going to have a real itchy trigger finger on that now that I've noticed that. But the fact of the matter is, it's below 200. I think that that's going to be a pretty solid number. So I'm going to have to mull over that one a little bit today. All right, that's about it. Other than check out the webinar that we did last Friday on synthetic shorts, and we've also done synthetic longs. Great for this mid-range type implied volatility that we're seeing along many of these stocks, right? Even if they've had the earnings, they're kind of holding on to their volatility right now just because of the environment we're in. That being said, what do? Do you buy options or sell options? Well, these synthetic longs and synthetic shorts neutralizes theta and volatility, so we don't have to worry about that. That's why I talk about it in this mid-range webinar, all right? So check that one out. Other than that, give me a thumbs up, thumbs down, like or dislike on this video. If it's a dislike, though, let me know what I'm doing wrong so I can try and help it out and tailor it so that it's a little bit more focused on what you guys are looking at, all right? So that's about it. Other than, if you can't take that, take it easy.